tariffs hit, tech stocks dropped, but Palantir, it rallied, and now it may be heading for $200. Just a few months ago, Palantir hit an all-time high of $125.41. Then came the pullback, a brutal 47% drop that had many investors wondering, is the AI hype over? Now, while most investors were watching this sell-off, Palantir was quietly closing in on a deal with NATO, and faster than anyone thought possible. The result, a 5.6% single-day surge, and a signal to the market that this wasn't just another dip. It might be the beginning of Palantir's next breakout. So now we have to ask, is this just a bounce or the first leg of a run towards $200? Palantir Technologies isn't your typical tech stock. Founded in 2003, it specializes in big data analytics and artificial intelligence, helping governments and enterprises make sense of enormous and complex data sets. Its software powers decision-making across defense, intelligence, and commercial operations. So what makes Palantir different? 3 AI engines power its global reach. Gotham for military and surveillance, Foundry for streamlining enterprise chaos, and Apollo, the deployment layer that makes it all work, even on the battlefield. Together, these aren't just platforms, they're Palantir's unfair advantage. Think of them as the brain, the nervous system, and the backbone of the modern AI war machine. While Palantir's made its name working with the US government, in recent years, it's made a serious push into international defense and commercial sectors. And if you've been wondering what could single-handedly flip the narrative on this stock, this is it. That momentum was on full display with the announcement in March 2025 that NATO had selected Palantir to supply its Maven Smart system, a cutting-edge AI platform designed to enhance situational awareness, intelligence fusion, and mission planning across all 32 NATO member states. This deal was a big one, not just in scope, but in speed. NATO fast-tracked the entire procurement process, finalizing the contract in just 6 months, a record by the alliance's standards. Even more impressive, Palantir's system is set to be operational within 30 days of signing. The day the deal was announced, Palantir stock jumped 5.6%, closing at just under $94. The market clearly saw this not just as a win, but as a signal that Palantir is moving into the global spotlight. Analysts took notice. Wedbush Securities called Palantir a top pick for 2025, citing the NATO deal as a validation of the company's strategic position in the AI defense space. But to really understand why this deal matters and why Palantir might be separating from the rest of tech, we need to rewind to what most investors missed during the sell-off. That sharp rally came after a brutal correction during the broader tech sell-off. Like many growth names, Palantir got hit hard, but the recovery told a very different story. Here's where it gets interesting. Most of the sell-off wasn't specific to Palantir. It came in the middle of mounting trade tensions between the US and China, with the White House rolling out a fresh round of tariffs on strategic sectors like semiconductors, electric vehicles, and solar. The Nasdaq took a hit. Tech stocks across the board struggled. Companies with heavy exposure to Chinese supply chains like Apple and Tesla faced real concerns. But Palantir, it plays by a different set of rules. Unlike Apple or Tesla, Palantir doesn't depend on overseas manufacturing or consumer cycles. Its core business, government AI infrastructure, is insulated from supply chain stocks. And that's exactly why, while the Nasdaq 100 fell, Palantir jumped. The market is starting to treat it less like a growth stock and more like a geopolitical hedge. In fact, Palantir was added to the Nasdaq 100 in December 2024, a major milestone that solidified its place among the tech elite. And since that inclusion, it's proved time and again that it doesn't move like your average tech stock. This divergence from the index shows that Palantir might be evolving into something rare in the current market, an AI growth company with real-world applications, deep government roots, and a business model that can weather global uncertainty. And as the world becomes more unstable, with trade wars, military escalations, and rising cyber threats, Palantir's role becomes even more vital. The question now isn't whether Palantir will survive the storm, it's whether the current dip is an opportunity to get in before the next leg up, and possibly a further run to $200. So what's the play here? Let's break down the roadmap and how to avoid getting whipsawed along the way. At the time of recording, Palantir has climbed roughly 47% from its April low, but it's still hovering just under that all-important $100 level, a classic psychological barrier that's likely to play a major role in what happens next. For those looking to initiate a position, a break-in close above $100 could be seen as an aggressive entry signal, suggesting that momentum is shifting back in favor of the bulls. But it's not without risk. $100 is a magnet for price action, and there's every chance we see a false breakout before any sustained moves higher. It's like jumping onto a moving train. Timing matters, and so does knowing where it's headed. For investors who prefer a more conservative approach, the ideal scenario would be a clear break and close above Palantir's current all-time high. That would serve as a stronger confirmation that the correction is behind us and that the next bullish phase, potentially carrying us towards the $200 mark, is officially underway. So what could propel Palantir towards $200 this year? It starts with the accelerating adoption of artificial intelligence across government and enterprise sectors. Palantir isn't just riding the AI wave, it's building the infrastructure behind it. With its platform being deployed in military operations, disaster response, border security, healthcare, and now commercial logistics, the total addressable market is growing fast. The recent NATO deal is just one example of the kind of multi-year, high-value contracts Palantir is capable of landing. And more could be on the horizon as global defense spending ramps up in response to geopolitical instability. It's important to remember, though, that all of this is new territory for Palantir's price action. We've never seen it trade at these levels with this kind of velocity, especially with the market reacting aggressively to headlines, earnings, and macro shifts. The push towards $200 isn't a guaranteed straight line, and that's exactly what makes Palantir a risky play. This isn't a mature, slow-moving stock. It's a high beta name with a history of sharp moves in both directions. While the upside is real, driven by AI adoption, government contracts, and rapid commercial expansion, the volatility can catch even experienced investors off guard. And that's why risk management is key. Having a strategy for how much of your portfolio to allocate, setting clear entry points, and just as importantly, knowing your exits are essential if you want to ride the upside without getting shaken out during pullbacks. Whether you're entering on a confirmed breakout or waiting for a push above the all-time high, it's critical to be disciplined. Palantir is a good performing stock, but having the right stock is only half the game. Because if you don't know how to manage risk, time entries, or hold through uncertainty, the best opportunity in the world, well, won't make you a dime. That's why I made this next video. I trained over 1,000 investors, and I'm breaking down exactly why most of them couldn't make money and how you can avoid their mistakes.